Alright guys, welcome back to the YouTube channel today. So we're going to have a quick review on what happened in price action on Monday, 7th of October, which was a trade I actually took. So I'm going to show you the reason why I did what I did, and we're also going to discuss how to navigate and discern on knowing when the market condition is going to really be hard. So on knowing when the market condition is really going to be hard, difficult to trade in, that's to say a high resistance liquidity run. Not that there is resistance anywhere, right? It's just that market is going to find resistance a hard time trading to liquidity pools, that's buy side liquidity or sell side liquidity, and we are also going to lack precision. That's to say, for example, you see how just after the 9:30 opening bell here, right? After the 9:30 opening bell here, it failed to create either a bullish or bearish fair value gap just in this window here. No bearish or bullish fair value gap at this point, just until the 9:42, 9:43 here. 9:43. That's when we had a fair value gap, and you know that we want to trade in the time window. Latest we should be out of a trade by 10:10, which is the macro. So the macro starts from 9:50 to 10:10. ICT macro, that's when it starts from. And we had a discount opening from the opening range gap. That's the settlement price of yesterday's price and today's opening price at New York opening bell, the 9:30 New York opening bell. So we had a discount opening, that's say it gapped lower, right? So we expected it to at least trade to the midpoint of this opening range gap here. I'm sorry, we can see that this is the midpoint here of this opening range gap here, just in our time window. This price trading to the midpoint, note this, price trading to the midpoint of this opening range gap happens 70% of the time. It happens 70% of the time with Nasdaq, right? It happens 70% of the time. So we expected it just in this our time window to trade to at least 50% of the opening range gap. That's the midpoint of the opening range gap, but it failed, and you see how jagged this high is here. So especially once you take out this low here, it expanded higher, give us probably a bullish fair value gap, so we can trade here. But just looking at this price action here, you see how we fail to create bullish fair value gaps to trade to probably this buy side 15-minute buy side liquidity. This is a 15-minute buy side liquidity. Once we go back to the higher time frame, you see that this is a 15-minute buy side liquidity. You see how it failed to do that, right? It failed to do that there. So that was giving me a clear indication that the market is really lacking behind precision, that whatever I'm going to be doing, I should be nimble and be very discreet about what I'm going to be. As such, I'm going to be reducing my risks on this trade, as you will see in a screenshot and a screen recording of the trade, that I really went in with a lower risk unlike other days. Right? So you see at this bearish fair value gap here, once it created this bearish fair value gap to the downside just after making these highs jagged, you see how it took out this high, took out this high, and this has taken out this high. Then we had a serious displacement to the downside. You've seen it there, and this is just at a bearish fair value gap that was traded out of. You see how it lacks precision, right? Now this displacement to the downside, creating this bearish fair value gap, this was my entry here, just having in the back of my mind that price has made these highs jagged, and we've taken a buy side liquidity, just resting above here. So this displacement to the downside, we have this bearish fair value gap, and it trades to the sell side liquidity. So just at this point here, I was trying to close, but my internet connection was pretty bad, right? It was pretty bad from here. My internet connection was pretty bad from here, so it got me out from at this point here. It got me out from there. I also I closed that. So one of the reasons the precision was lagging at this point, just like this, was that in Forex Factory, just as you can see here, in our time window, that will be 9:30 a.m. GMT plus one Nigerian time, 9:30 a.m. You see, we don't have any US news until 6 p.m. US time. Have you seen that? Until 6 p.m. US time. That was when you had a US news. So just because that we don't have a high impact news that's going to pump in volatility for us, you see how it lacks precision here. Even when we had a good opening range gap, as you can see here, even when we had a good opening range gap, right? You see how we lack precision right here. So that contributes to price lagging in precision. And that's why we have this kind of move here. On a normal day, you will just see it trade to the low of this bearish favor gap and display seriously to the downside. So not having a high impact news or a medium impact news or even a USD news at all just before our 9:30 opening bell. That's to say 2 p.m. GMT plus one, 2:30 p.m. GMT plus one. Not having a high impact news just before that time will really affect the market in terms of volatility, right? So that was one of the reasons we can anticipate a low in precision and the market not fully delivering in high probability, trading with very high resistance liquidity runs. So you see how difficult it was here to trade to this buy side. On a normal day, it should just on an ideal day, it should just straight to this buy side liquidity resting above here, then displaced lower, create a bearish favor leg. But in this case, you see how it failed here. So all this behavior is an indication of knowing that it's really going to be a difficult day. And you also see how just here, let me take this out for a minute. So you also see how just here, instead of trading through maybe the low or midpoint of this bearish fair value gap to continue lower, you see how we traded outside this point here. See how we traded colored outside the lines, right? Colored outside the lines here, then traded lower. So this already a sign of a sign the market is giving for low precision. So you should be very, very careful in days like this. These are the kind of days that you would highly lose. You're highly likely to lose your money with this model. So it's best to know when the model is going to work and when it's going to fail. So I'm trying to show you when it's really going to fail and how to discern that it's going to fail. So just outside our time window, it traded to this buy side liquidity. This is a 15-minute buy side liquidity. Let's just go to a 15-minute time frame. So this is a 15-minute buy side liquidity here. Just as you've seen, it traded right there, and you see how the body still remains inside the bearish fair value gap. And this is the 2 hours bearish fair value gap. Let's just go to the 2 hours time frame so we have everything in order. So just right here is a 2 hours bearish fair value gap. As you can see, price displaced to the downside, created a bearish fair value gap. So that's good. You see how we traded to the bearish fair value gap, but still stayed inside this bearish fair value gap here. So this is the midpoint of the bearish fair value gap. You see how the candlestick body still stays below the bearish fair value gap. So in the 1 hour time frame, you see how we have this bearish fair value gap here really small, and it's also overlap the 2 hours bearish fair value gap. This is also a bearish fair value gap here, but you see how it traded outside of it and the candle closed above that. So you will just be watching how it's going to trade back and trade back to this bearish fair value gap, inverting this and coming back to this point, which it did. Right, so this becomes an inversion fair value gap from here, but you should also consider this point that price is really going to act as resistance here. This is also resistance, not just rushing to this buy side liquidity here. This is swing high, this buy side liquidity here. So from here you look for your target at the sell side liquidity, right? Then let's go to the 15 minutes time frame now. So just in the 15 minutes time frame, we have this buy side here that was taken, and it was outside our time window. You see that, right? And the most movement came in when we have a news. This is where we had the news here, 6 p.m. GMT +1, and that would be 1 p.m. That will be 1 p.m. here. We are getting to that, so you'll see clearly. So once it took out this buy side liquidity, the swing high is a buy side liquidity, took it out here, and it's inside a bearish fair value gap, and you see how the wick still stays above here. This is a mohawk right here. So once it takes a buy side here, drops, but it's just that it's outside our time window, and you see how you should have just traded to this point here. We're really expecting it to trade to this buy side liquidity and fair value gap at this point in our time window, but it failed, right? It did not do that. So clear indication that the precision is low, very obvious. So you should be very slow in whatever you're going to do. So 5 minutes time frame. So just in the 5 minute time frame, see how it is to and fro. You hardly find a fair value gap, right? After the 9:30 opening bell, this way it traded to the buy side liquidity 15 minutes. See that sell side liquidity here is swing low. It's also a swing low. This low here was obvious in the 1 minute time frame. We are getting to that. So just hit failing to take this 15 minutes buy side liquidity, clear indication that it's having a high resistance day, a tough time trading, not easy trading day, right? You're going to be anticipating a really hard time trading, because on a normal day after the 9:30 opening bell, you should just pull to a buy side liquidity and show you an indication to drop from here in our time window, but it failed and happened outside our time window. And you see how just outside our time window it traded to the opening range gap. 70% of the time you're going to always see price trade to at least 50% of the opening range gap when we have a large opening range gap day, right? So once he came here, the news was just at 1 p.m. New York time. So you see how we had a lot of clean moves here. It was now easy a bit, right? We have quick expansion to the upside, taking out a buy side liquidity here. So this way it took out a buy side liquidity. This way it took out the buy side liquidity. You can call it a turtle soup, right? It's still okay, provided we've taken a swing high. So it's still a turtle soup. Then from there it displaced lower. See how it displaced lower, and this is the 1 hour fair value gap. So you see the behavior from this place. You see how the body of the candlestick still remains below the 1 hour bearish fair value gap displays, breaks this low. This way now a shift in market structure is valid. But I still want you to focus in our time window. Right, I still want you to focus in our time window. This is still a clean model, a nice trade opportunity, but this is outside our time window. But if it was in our time window, this is what it should have just looked like, right? Sorry, my background is a bit noisy. This is what it would have just looked like, and then displaced to the downside. This is a breaker right here. This down close candle. So this is a breaker right here. You see how it trades to that. Okay, so let me take that out. So the fair value gap here, and this is also a fair value gap. If you've gone through the 2022 mentorship from ICT, you see that once you have two fair value gaps, you should expect it to trade to the last fair value gap just above it. So this is it here, and the mohawk happens here. You see how the body of the candlestick still remains below the fair value gap, and the wick straight outside of it. That's the ICT mohawk right there. And now you see the movement coming because we have a news. You see how it drops because we have a news prior to this time, right? So once you have a news prior to your trading time, that is prior to 9:30 opening bell, then after the 9:30 opening bell, there's a high probability that we are going to have good expansions, right? And we are going to have clean precision to a very good degree, and we also have a good opening range gap. We are going to also have a good opening range gap, right? So this is it here. So you'll be looking at it trading to the sell side liquidity from the higher time frame we marked, right? So for this particular one here, I got out right here at the sell side liquidity, this swing low, here. You see how it traded to this fair value gap. I want you to really see this is the mohawk here, so you can trust and know that just this happening, that the position in the market is low and they've not pumped in liquidity, volatility, I mean. So it's just knowing when the current in the ocean is cleaner to swim and safer, right? So this is it. So I trust you found this insightful. So if you are just new to the channel, like this video and subscribe to the channel for more reviews. I'm literally going to be doing every review of every trade I'm going to be taking for some time now. At least it adds up to your development as a trader. Thank you till the next video.